Hello and welcome back to Coin Lady channel. As both camps argue over who has jurisdiction over cryptocurrency, the business is caught in the political quagmire. The future of digital assets was the topic of today's hearing. We'll simplify things for you. A memo was released by Elena Terrett in the lead up to the event. To me, that says a lot. We will go through the motions, but I have little faith that anything will actually be accomplished. Why, for example, would they forgo the opportunity to have a huge party and hold endless hearings on the dime of the American taxpayer? Just like, why give that up? However, the debt ceiling is looming, so there might be enough leverage here. Perhaps they will be able to break through this impasse and reach an understanding. But first, we have some news to share before we dive into all that. The Internal Revenue Service is demanding $44 billion from FTX, the first. This is a terrible crime. This is completely absurd. Let's say you had $200,000 worth of Bitcoin on FTXS and the company went bankrupt, but you still got some of your money back. They pocketed the money rather than sharing it with you, and they used it to settle with you. The debts and unpaid taxes of Sam Bankman-Fried. Why should you, with all your worth, be used to settle his tax bill? They must implement some sort of safeguard for their clientele. Investors in FTX should now write down their whole investment. It seems that your business endeavor has been a failure. That's okay, but you can't use your customers' money to cover your tax bill. This next piece raises an intriguing question, and I predict things will heat up considerably once we see the Coinbase lawsuit filed. John Deaton claims cryptocurrencies can be offered as securities in the main market, but not in the secondary market, where you and I make our purchases. The article continues with the inventor of crypto law quoting Howie to argue that XRP and Bitcoin are not securities. Funding was not secured by the orange groves, but rather the raising of money. Howie Company broke the law by doing such with their securities. It's easy to see why you'd think this. In other words, XRP is neither a stock in a firm nor a debt security. A commodity is being offered for sale. However, the judge's ruling might classify Ripple's behavior as a violation of securities law. Why, therefore, won't the SEC verify this? Okay, here's my question. If the item being sold on the secondary market is not a security by definition, then Coinbase, which is only dealing in commodities, should be left alone. I mean, if that's their goal and all. They seek access for the purpose of monitoring and policing those communications. However, they lack legal standing to do so if they are not engaged in the sale of securities. What they included in their complaint to Coinbase will be fascinating to see unfold. It'll probably be here any minute now. Are they going to continue the recent trend and list specific coins, claiming that you traded them despite the fact that they are not currencies but rather securities, in their formal complaint? Recently, we witnessed that. The most famous one was Algorand. They didn't actually file suit against Algorand, but rather threw the company's name into a broader case. Is that planned for the Coinbase version? Who, exactly, will be revealed? According to Brad Garlinghouse, who's quoted in this article's follow-up, by the time this litigation is over, Ripple will have spent around $200 million fighting a legal battle over nothing. As an alternative, the SEC might simply provide recommendations. A follow-up will be made. John Deaton has stated that the SEC is overreaching its jurisdiction in this case, and thus we must go through with this ludicrous exercise. The good news is that progress is also being made in other parts of the world. Here, G20 markets are implementing more refined and transparent rules. This post is titled, US Lawmakers Look to EU, UK for Crypto Regulations and Joint Hearing. The United States need not rush things. They don't have to win the race by a long shot, but they also can't finish last. It's high time they left. Here, the European Union's markets and crypto asset frameworks appear to be on the verge of being passed. There is a lot of huge business going on, so be careful. It's not limited to the crypto industry either. Companies like Apple, Google, and Amazon will gradually expand into these new marketplaces. The same kind of massive wave of activity that we see with AI is eventually going to happen with cryptocurrencies, and a lot of the companies involved will move abroad. These larger, more sophisticated marketplaces and major economic hubs are significantly different from, say, El Salvador's acceptance of Bitcoin as legal money. They face competition from the European Union, the United Kingdom, and other large markets. Take your money and your business somewhere. Despite the fact that our financial markets are massive, today is not tomorrow. Some of it will happen regardless of what you do, but if you're not careful, a lot of it will travel to places like Singapore and the European Union. After today's hearing on digital assets in Congress, Elena revealed that she had obtained a memo sent to many influential Democrats, in which they were urged to maintain their support for the SEC's assertion that nearly all cryptocurrencies constitute securities. And the crypto issue is ambiguous, but it boils down to widespread disobedience. The memo is finally in my hands. We're going to examine it in detail. But I believe it sheds light on not only the political context, but also the SEC goals and perspective in this matter. They make the following claims. The Republican Party has resolved to pursue partisan crypto legislation that will establish novel regulatory structures for digital assets. In a nutshell, there's no need for this. The SEC has the necessary infrastructure to manage this type of asset. The issue stems from a lack of clarity. As I've already stated, this widespread violation of legal norms cannot be overlooked. This is when things start to get interesting. Almost without exception, the SEC views cryptocurrencies as securities. I also don't give a hoot about the power battle, if you must know. A declaration of victory or defeat. It doesn't matter to me how cryptocurrencies are categorized, but there must be clear frameworks for their use. Therefore, I couldn't care less if you wanted to tell me that Ripple's XRP is the security and that they need to provide various details about it. If it's classified as a security on the secondary market, you'll lose access to all of its features and fall behind every other sane region that's introducing frameworks. So, once more, it's not the particulars that interest me. You need to be able to construct genuine businesses for genuine clients in a compliant manner, where all parties are subject to the same laws and standards and operating on a level playing field. It is inappropriate to make a request that is specific to Cardano but not the Ethereum Foundation or Ripple but not Polkadot-like. Applying the regulations consistently is essential. And we certainly can't rely on the SEC to deliver that to us first. It must be documented formally. We need to sort this out, and once we do, your best actors will step forward and the room will thrive. You may expect to see this area reach new heights as we have access to a larger pool of reports from which to extract credible data. Let's just hope it doesn't take too much longer. This market requires a major success. Let's hope that's the case. Eventually, this will happen whether or not they can get to an agreed-upon set of frameworks. Just give it some time. The G20 countries will exert pressure on the United States. Each side is vying for a piece of the action, therefore there have been numerous hearings and fights on the political front. This is a lot of meaningless nonsense. It's a certainty. Leave a comment and tell me what you think. Please like and subscribe, as always. See you later, bye.